I don't think we're in a bear market. I think Bitcoin it's moving through this phase where it moved from 4,000 to 40,000 with volatility, and it's going to move from 4,000 to 500,000. I mean, the next plateau is
Welcome to Dream Richer. How do you think Bitcoin will perform this year? Based on the Fear and Greed Index, the market has entered into extreme fear. The whole assets market, ranging from stocks to crypto, has seen a drastic downturn, even though Bitcoin has seen a recent bounce up after collapsing down to 30K. However, within past month, the value of Bitcoin has dropped below $31,000, less than half of what it was at its peak last November. On Monday, key European, Asian, and US indexes slid lower again. Investors are fleeing riskier assets for safe havens like the dollar. On Monday, Japan's Nikkei index dropped 2.5%, while London's FTSE 100 closed down more than 2%. In the US, the Dow fell nearly 2%, the S&P 500 dropped 3.2%, and Nasdaq lost 4.3%, deepening the falls in recent weeks. In times of market uncertainty, traditional investors will often sell what they see as riskier assets, like digital currency, and move their money into safer investments. Moves in cryptocurrency markets have increasingly followed wider trends as professional investors, such as hedge funds and money managers, become more active in trading what was once the domain of individual investors and enthusiasts. Today, Saylor explains why he believes the market is behaving in such a manner. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
right. This is the strategy of the business. We're going to acquire digital property, and Bitcoin is the world's greatest digital property, like a property development company. Like if I moved to Dubai and I decided just to buy all the land in Dubai, or all the land I could buy, or buy up all of Manhattan, buying Bitcoin forever. And the reason why is because the amount of Bitcoin coming on the market is exponentially falling, and we know it's asymptotically capped at 21 million. And just this last week, Bitfarms announced they bought 1,000 Bitcoin with cash. That's $42 million or so worth of Bitcoin. Okay, it's a company buying Bitcoin as fast as it is mining Bitcoin. So all the public investors are long Bitcoin. They expect Bitcoin to go up, right? I think we're in a consolidating plateau, and I think it's a pretty good plateau because there are all these conventional mainstream investors, and they've been watching Bitcoin. And when Bitcoin was going up too fast, when it was running parabolic, they're afraid to buy in. But right now, sitting in a plateau where they're a lot more likely to buy it, by the way, if the return looks similar to the NASDAQ, and if the return was 5x the NASDAQ. We got some really great news this week. Miller came out and he announced that half of his personal net worth, half of his personal portfolio is invested in Bitcoin. Fill in the blank, and they're all starting to wake up to this. And when they see Bill Miller, who's runs multiple billions of dollars and is a billionaire in his own right, saying this is the only thing I can find that can go up by a factor of 10 to 50, that also is a store of value asset, right? Then they start to pay attention. Now, if Bitcoin was trading at an all-time high and it was like on fire, they'd be afraid. But you kind of like the idea that Bitcoin is 40% off the all-time high and it's catching its breath, and you think maybe this is an entry point. And so I don't think we're in a bear market. I think Bitcoin it's moving through this phase where it moved from 4,000 to 40,000 with volatility, and it's going to move from 4,000 to 500,000. I mean, the next plateau is the gold plateau, right? To basically, digital gold replaces gold and flips gold, and that's like a $500,000 number, I think. Then after that, it's really just a property index or a monetary index, which should be 10x that. So, what I see is a move from where we are to 500,000 over 3, 4, 5 years, and then a move over the following 3 to 5 years. It could take 10 years, but a move in the next epic from the 500,000 to $5 million range.
There are several reasons why crypto's price action took a huge downturn over the past month. Factors such as rising inflation, geopolitical crises, and shifting U.S. monetary policy all continue to drive extra short-term volatility to the crypto and stock markets. The crypto market has increasingly tracked the stock market in recent months, which makes it even more intertwined with global economic factors. In the words of Michael Saylor, the market crash may indeed be a blessing in disguise. As he argues, whenever the market drops, you are bound to see more investors take position in crypto. Why? Because it marks a healthy entry point for large corporate organizations and large fund allocating companies who want to buy crypto assets.
Because ultimately, people say, what is Bitcoin? Well, Bitcoin is the apex property of the human race. It's the only property you can truly own. So the question is, who wants it? Well, everybody in the world with weaker property. The problem with investing in a currency derivative is the currencies are collapsing, right? And they're collapsing at 10, 15% a year in the Western world, but they're collapsing at 40%, 50, 60% a year in the developing world. So bonds, they're weak property. Real estate is weak property because you've got a politician that can they're going to tax it and they can take it away from you and you can't move it if you need to leave. So your property is all weak, all of it. And so how much is weak? Hundreds of trillions of dollars of weak property. So ultimately, I think that there are 8 billion people on the planet, or there shortly will be 8 billion people on the planet, and they're all going to want some amount of digital property instead of like that second Airbnb or that investment property or that equity. So that means that, you and I, we have our work cut out for us for the next decade, because this is going to be a decade of education. And so when you look at, what is my thesis for Bitcoin over the long term, my thesis is technology will advance. Everybody's smartphones are going to get more powerful. We're going to get to a world where eventually, Google and Facebook and Apple, they're going to also support this digital property and digital currency. Twitter's going to spread, YouTube is going to spread, knowledge is going to spread. And I suppose even 20 years from now, there will probably be some kind of ignorant, patriots that are ideologues that'll say, I reject all new things and I'm going to just do whatever I'm told. But it's going to get to be an increasingly small portion of the population. And by the way, they're going to lose their money, right? Like the point is, they're going to lose their money. The money is going to move to the wise. And so the smarter part of the population is going to get richer. The wealth is going to transfer, and that's going to create a strong dynamic. So the Bitcoin path is clear. We're not the concept of bear market only makes sense if you have a short enough time horizon. Like if you're a trader and your time horizon is 12 weeks, you can have a bear market. But if you have a 10-year time horizon, then you really have to ask yourself, what is the technology trend and what is the cultural trend? And the technology trend is clear. We're moving toward everybody on Earth having a digital wallet that they can move digital assets around. That's clear. So we're globalizing. We're using language like English. Like we're globalizing our language. We're globalizing our currency. We're globalizing our property. It's moving on digital rails. That creates an advantage for the early adopters. There's going to be volatility, but like if you bought Amazon stock 10 years ago, you could have bought it for $250 a share. People would have said you're stupid, and if you were holding Amazon stock 20 years ago, it traded down 90%, right? Well, the world's second richest or richest man was stupid enough not to sell when it traded down 90%. And so, I mean, the real secret to success is you figure out the technology trend over a decade, over between 10 and 30 years. And then you just either make that asset or hold that asset.
Yep.
And you don't really obsess over short-term cycles because you outsmart yourself.
It's clear from Michael Saylor's explanation that the market seems to be in a consolidation phase, where it may seem bearish at times, but can break out at any time. As Mr. Saylor argued, the main factor of concern are large investors or whales, who will take up positions in crypto whenever the market is down. However, there are several reasons why many investment whales still choose not to invest in crypto even when the market is down. They include: 1. The on-ramp remains too steep. 2. Presence does not equal profit or guarantee a bull market. And finally, number 3. Compared to traditional markets, the crypto sector is too small. To learn more about the latest crypto news, watch these videos here.